Welcome back to Debt-Free Dreams, your go-to channel for unlocking financial freedom through cryptocurrency. Have you ever heard about crypto arbitrage trading? It's one of the most exciting and low-risk ways to make money in crypto. By taking advantage of price differences across exchanges, you can pocket profits without worrying about the wild swings of the market. Sounds like a dream, right? In this video, I'll break down what crypto arbitrage trading is, how it works, and step-by-step strategies to profit from it. Plus, I'll share the best tools to make crypto arbitrage as smooth and efficient as possible. Stick around, and let's dive into the ultimate guide to making money with crypto arbitrage. Don't forget to check out the tools and platforms in the description below. Part 1. What is crypto arbitrage trading? Crypto arbitrage trading is a strategy where traders exploit price differences for the same cryptocurrency across multiple exchanges. How it works: let's say Bitcoin is priced at $25,000 on exchange and $25,500 on exchange B. A trader can buy Bitcoin on exchange A, transfer it to exchange B, and sell it for a $500 profit minus fees. Why does this happen? 1. Market inefficiencies. Different exchanges have varying levels of liquidity and trading volumes. 2. Geographical differences. Exchanges in different countries might have price discrepancies due to currency exchange rates or local demand. 3. Latency in price updates. Some exchanges are slower to update prices, creating opportunities for arbitrage. Part 2. The 3 types of crypto arbitrage. 1. Spatial arbitrage between exchanges. Buy a cryptocurrency on one exchange and sell it on another where the price is higher. Example: buy Bitcoin on Binance and sell it on Coinbase if there's a price difference. Tools. Platforms like Coinstats and 3 can track prices across exchanges in real time. 2. Triangular arbitrage within the same exchange. This involves trading between 3 different currency pairs to capitalize on price discrepancies. Example: start with BTC, trade it for ETH, then trade ETH for USDT, and finally back to BTC, locking in profits along the way. Best. 4. Traders with advanced strategies who want to avoid transfer fees. 3. Statistical arbitrage using algorithms. Use automated trading bots to scan the market for patterns and execute trades in seconds. Tools. 3 offers bots specifically designed for arbitrage trading. Part 3. How to get started with crypto arbitrage trading. Step 1. Open accounts on multiple exchanges. To capitalize on price differences, you'll need accounts on at least 3 to 5 reputable exchanges. Recommended exchanges: Binance, Coinbase, Kraken, Bybit, and KuCoin. Step 2. Use price tracking tools. Stay ahead of the game by using tools that monitor price differences in real time. Coinstats tracks crypto prices across multiple exchanges, so you never miss an opportunity. 3 automates your arbitrage trades for maximum efficiency. Step 3. Calculate fees and transfer times. Before executing a trade, account for 1. Trading fees on both exchanges. 2. Withdrawal and deposit fees. 3. Transfer times between exchanges to avoid delays during price changes. Step 4. Execute your trades. Once you've identified an opportunity, act quickly to buy on the cheaper exchange and sell on the more expensive one. Part 4. Tools and platforms to simplify crypto arbitrage. 1. Coinstats, a powerful tool to monitor real-time price differences across exchanges and track your portfolio. 2. 3 a must-have for automated trading. Their arbitrage bot ensures lightning-fast execution and minimizes risk. 3. Bybit, known for low fees and high liquidity, making it a great choice for arbitrage traders. 4. Binance offers deep liquidity and numerous trading pairs to maximize opportunities. Part 5. Benefits and risks of crypto arbitrage. 3 benefits. 1. Low risk. Price differences are predictable and don't rely on market trends. 2. Consistent profits. Opportunities arise daily in the crypto market. 3. No need for market forecasting. Focus on price gaps rather than market sentiment. 3 risks. 1. Fees. High withdrawal or deposit fees can eat into profits. 2. Transfer delays. Price gaps might close during slow transactions. 3. Regulatory restrictions. Some exchanges might not be available in your country. Pro tip: Avoid delays by using exchanges with low withdrawal fees and fast processing times, like Binance and Bybit. Part 6. Advanced Arbitrage Strategies. 1. Leverage arbitrage. Use borrowed funds to amplify your profits. While riskier, it can be highly profitable when executed correctly. 2. Cross-border arbitrage. Take advantage of regional price differences, especially in countries with limited crypto access. 3. Arbitrage bots. Invest in an automated bot like those offered by 3 Commas. Bots can scan thousands of price pairs in seconds and execute trades faster than any human could. Crypto arbitrage trading is an excellent way to generate consistent profits in the volatile crypto market. By exploiting price differences across exchanges or currency pairs, you can make money with relatively low risk. If you're ready to dive into crypto arbitrage, don't forget to check out the tools and platforms in the description below. Smash that like button, subscribe to Debt-Free Dreams, and turn on notifications so you never miss a crypto tip. Thanks for watching.